What if the biggest financial crisis of our generation wasn't a crisis at all? What if the chaos, the panic, and the shuttered businesses were just cover for a meticulously planned takeover hidden in plain sight? The story you've been told is that the government saved the banking system from collapse, but the shocking truth is far darker. They didn't save the system. They helped the giants consume it, and they used your money to do it. To understand how the game was rigged, we have to go back to 2019, to a time before the world changed forever. On the surface, America's biggest banks, names like JPMorgan Chase, Bank of America, and Wells Fargo, seemed invincible. But behind the boardroom doors, executives were facing a nightmare. Their dominance was slowly eroding. Digital competitors like Robinhood and Square were stealing away their younger customers, while regional banks were winning the fight for local business lending with better service and community ties. To make matters worse, years of historically low interest rates had crushed their profit margins. The only way for these giants to grow was to buy their competition. But there was a problem. Healthy regional banks were expensive. Too expensive to acquire without tanking their stock price. The mega banks were trapped. They had the ambition to conquer the market, but not the opportunity. They needed a trigger, a moment of chaos so profound it would bring their competitors to their knees. And in March 2020, they got exactly what they were waiting for. When the world shut down, a secret switch was flipped in the American financial system. As fear spread across the country, a primal instinct took over. The flight to safety. People started pulling their money out of smaller, regional institutions, fearing they wouldn't survive the economic shutdown. But that money didn't just vanish into mattresses. Billions upon billions of dollars flowed directly into the digital vaults of the very largest banks. Why? Because for decades, Americans had been conditioned to believe these institutions were too big to fail. They carried an unspoken guarantee from the US government. Suddenly, the regional banks that had served communities for generations were bleeding deposits, watching their lifeblood drain away overnight. For the mega banks, this panic wasn't a problem. It was the perfect weapon. It destabilized their competition for free. But the flow of panicked money was only the beginning. The real power play was about to come from the government itself. As the economy spiraled, the Federal Reserve stepped in with what they called a lifeline, an unprecedented injection of over $5 trillion into the financial system. The public was told this was to keep the economy afloat, to help everyone. But that was a lie. This colossal sum of money wasn't distributed evenly. It was funneled primarily through the largest financial institutions. This wasn't a bailout for America. It was a war chest for Wall Street's biggest players. While regional banks were fighting for survival, scrambling for capital, and losing customers, the mega banks were suddenly swimming in virtually unlimited, cheap government money. They now had the firepower to do what they couldn't do in 2019, go on the biggest shopping spree in financial history. The trap was sprung. The competitors were weak, desperate, and undervalued. And what happened next would prove the plan was working perfectly. Fast forward to 2023 and the dominoes began to fall, exactly as predicted. The first to go was Silicon Valley Bank. The media blamed its collapse on risky investments, but the real story was far more sinister. The Fed's aggressive interest rate hikes, designed to fight inflation, had turned the bonds held by thousands of regional banks into ticking time bombs. As their value plummeted, it created massive, unrealized losses on their books. All it took was a spark of fear, amplified by social media, to start a bank run that erased a century-old institution in 48 hours. Then, Signature Bank collapsed. And then came First Republic, one of the nation's premier regional banks. Its failure wasn't just a random event, it was a demonstration of the new power dynamic. The system was now designed to punish any bank that wasn't part of the exclusive on too big to fail club. And as First Republic teetered on the edge, the biggest shark in the water was about to get a government-escorted meal. The collapse of First Republic wasn't a tragedy for everyone. For JPMorgan Chase, it was the deal of a century. As depositors fled, the government stepped in to manage the failure. But their solution was astonishing. They orchestrated a weekend auction where the winner was none other than Jamie Dimon's JPMorgan, already the largest bank in the country. They were allowed to absorb all of First Republic's valuable assets and wealthy clients, while the government covered most of the losses. This wasn't a rescue, it was a coronation. The government didn't just allow the biggest bank to get bigger, they brokered the deal and used taxpayer funds to make it happen. It sent a chilling message to the entire industry. In a crisis, the giants will be rewarded with the spoils of the fallen. But how could this happen so quickly and so openly? Because behind the scenes, the rulebook itself was being secretly rewritten to favor the kings of Wall Street. While the public was distracted by headlines of collapsing banks, a silent war was being waged in Washington, D.C. The regulations designed to prevent this exact kind of monopoly power were being systematically dismantled. The FDIC, the very agency meant to ensure financial stability, quietly reinstated outdated merger guidelines from 1998, making it far easier for large banks to swallow smaller ones. The approval process for acquisitions, which used to take half a year, was fast-tracked, with some deals closing in just over 100 days. Rules that would have slowed down this feeding frenzy were overturned or simply ignored. The watchdogs weren't just asleep at the wheel. They were actively opening the gates for the wolves. This wasn't a series of independent decisions. It was a coordinated effort to remove any and all obstacles standing in the way of total consolidation. And the result of this campaign is a banking landscape that is now permanently and dangerously broken. Welcome to America's new two-tier financial system. At the top, you have a handful of mega banks, 5 of which now control over half of all the money in the country. These institutions operate with the full backing of the US government. They are not just too big to fail, they are now too powerful to regulate. In the second tier, there is everyone else. The regional and community banks that survived the initial onslaught are now facing extinction. Projections show that nearly half of the remaining smaller banks could disappear within the next decade. For the average American, the consequences are devastating. The local banker who knew your name and understood your small business has been replaced by a call center algorithm in a skyscraper 1,000 miles away. Small business lending is drying up because mega banks don't bother with loans that do not meet their rigid, impersonal criteria. Banking fees are rising because there's no real competition left to keep them in check. The engine of American commerce is being starved of the capital it needs to grow, all because a few giants were allowed to corner the market. This wasn't a series of unfortunate events. It was a transfer of wealth and power so profound it has reshaped our entire economy. The narrative of a fragile system saved by brave regulators is a fantasy. The reality is that the largest banks entered the 2020 crisis with a motive: to eliminate their competition. The pandemic provided the perfect trigger. Government money provided the weapon, and complicit regulators cleared the path. They didn't just weather the storm, they harnessed it to achieve a level of market control their predecessors could only have dreamed of. The mega bank takeover is now complete, and this leaves us with the most terrifying question of all. In the next crisis, a crisis that this new, hyper-concentrated system makes inevitable, who will be left to bail them out?